Going to dive into the very last financial statement, and that's going to be your cash flow statement. We're going to talk about the cash flow statement. And the cash flow statement is a pretty good statement. Use the cash flow statement to really understand where and how your cash is being generated and where it's going. And so your cash flow statement focuses only on one particular account. And that one particular account is cash. And so your object of the cash flow statement is to itemize the cash flows. And when we think about cash flows, there's only two ways that cash can flow to the company. It can either flow in or it can flow out. So we take those cash flows for a period and we break them down into various activities. And so those activities are significant because it shows us what we're concentrating our cash on in terms of whether coming into the business or whether going out. So what you need to understand is how to create a cash flow to separate it into the proper activities. And so when we're talking about a cash flow statement, we have three activities. That need to be handled accordingly. We have, and it's in this particular order, operating activities. We have investing activities, and we have financing activities. So we have operating activities, we have investing activities, and we have financing activities. And so before we go into what these particular activities represent, I want you to understand how to identify a cash flow activity. Now, in order for it to be considered a cash flow activity, it has to be based on a transaction that has some kind of effect on what? Cash. So if the transaction affects cash, it automatically becomes a cash flow activity. So what are you really saying, Dr. Holloman? In terms of logically understanding if it's a cash flow activity, ask yourself if you're either debiting or crediting cash on a transaction. If you're not debiting or crediting cash on a transaction, it is not a cash flow activity. Furthermore, you can know if the cash flow activity is an inflow or outflow based on whether you are debiting or crediting cash. Cash being an asset, we know that whenever we debit cash, we're increasing it in the business. So anytime you debit cash on an activity, you know that it's a cash flow inflow, right? Anytime you're crediting cash, you simply understand that that's going to be a cash flow outflow. And so that's how we know if we have a cash flow activity, because it has to either be debited or credited cash. So now we can talk about what's the difference between these three types. Your operating activities deal with any kind of income statement items, and let me erase this. Income statement items, ampersand, and current assets / liabilities. Any income statement items and current assets / liabilities. So if you have a transaction that requires you to debit or credit cash, and the other side of that transaction is going to be an income statement item, or a current asset or a current liability, then it's an operating. I'm going to say that again. I want y'all to pay attention. If you have a transaction that you have to debit or credit cash, which is going to dictate a cash flow activity, and the opposing account that you have to debit or credit to balance this out, if it becomes an income statement item, which is either a revenue or an expense, a gain or a loss, or becomes an asset or a liability, then you have an operating activity. So I'll give you quickly some, but you need to study it yourself. What about paying on an expense, right? If we pay on a salaries expense, is it an operating activity? Of course it is. What's my journal entry? When you pay on a salary expense, you debit salary expense, which is an income statement item, and you credit cash. So that's an example of an operating outflow activity. What about collecting on our account? If we collect on our account, we're going to debit cash, right, which makes it an inflow activity. And what are we going to credit when we collect on our account? Accounts receivable. Accounts receivable is a current asset. So that makes it easy to identify that we're dealing with an operating activity. Now, what about purchasing land, right? Purchasing land. When you purchase land, you debit land, you credit cash, right? But however, what is land? Cash is an outflow, so we know we're dealing with outflow on that because it's being credited. But what is land? Is land a current asset? No. Land is a long term. So would that be an operating activity? It would not. Which brings me to the next activity. The next activity is called investing. And all investing activities deal with long-term assets. So any long-term assets that we're going to deal with, such as land, such as equipment, such as furniture, such as notes receivable, any type of those long-term assets, long-term investments, right? Any type of those, whether we're purchasing them or selling them, will be considered a what? Investing activity. Investing, investments, balance sheet, right? Long-term assets, right? So give me an example of those. Selling land, purchasing equipment, selling furniture, lending money out on a note, creating a note receivable, debit note receivable, credit cash. Lending money out on a note, that's an investing activity. Okay? What about common stock? What about issuing stock? Is that an investment activity? We debit cash, we credit common stock. Is common stock a long-term asset? It is not. Therefore, it is not an investment activity, and it doesn't belong on the income statement, and it's not a current asset or a current liability. So therefore, that's going to lead me to my following activity, which is financing. Financing activity. Financing activities deal with long-term liabilities and stockholders' equity. Financing activities deal with long-term liabilities and stockholders' equity. And so what are we talking about when we're dealing with financing? We're talking about bonds, lending money out. Borrowing money. Bonds, borrowing money from people. We're talking about dividends, paying dividends because dividends affect stockholders' equity. We're talking about issuing shares of stock. All of those things will be considered financing activities, and depending on whether we're going to debit or credit cash, it's going to tell you if it's an inflow or an outflow. Okay?